Firstly, thanks for your comments, guys. I keep getting lots of requests to cover what I think Avax is going to do during the next crypto bull run. We've been monitoring Avax since the last crypto bear market, so we've got a good idea of the technical analysis, what levels hold on Avax, what Fibonacci levels are respected. And when you look at a naked price chart like that, it's hard to decipher. However, like I say, we've been following this from the last crypto bull run, so we know exactly where we are, we know exactly what needs to happen, and we know exactly what levels need to be met. Okay, guys, Keith at Crypto Bullseye. Welcome back to the channel. So what we're going to do in this video is things a little bit differently. We're going to go back in time through the analysis that I've previously done on Avax. We're going to do that to find out what key levels need to overcome. Once we know what key levels need to overcome, then we can predict bull market future projection targets using Fibonacci extension tools. So the key areas, let's go through them, guys. We went through this on the channel. Don't need to go back to the previous videos. I'm going to go through it all here. So the first thing that you can see, guys, is you put in your bull market high. Avax put a bull market high of $147.94. For Avax to put in new all-time highs, that's the big number. That's the big round number that we need to beat, $147.94, previous all-time high. So we've come down, and what we've done, and this is what you got to expect, guys, in a crypto market. When you get to the top, when you get to euphoria phase, all your P&L can just do this, drop within a short space of time, 63%. Then when it went to its bear market low, all the way down, 93%, guys. Avax is a good project. Avax has got things being built on it. Avax is continuously developing. It's a good project, guys, but they still lose 95, 98% of their value during a bear market. So you've got to be mindful of that, guys. You need to rotate during the end of the bull market into lower risk assets and then into more lower risk assets until you're eventually into cash. So we've got a 61.8% retracement level. This is going to be a key significant point. We didn't know this was going to be a 61.8 retracement level until we'd put in this bottom here. So once we'd put in the bottom, then we could measure using our Fibonacci retracement tool, to understand that that is the 61.8% retracement. So we know that that's going to be a key level to overcome, a 61.8% retracement. When Avax hits this level, expect some kind of retracement. Exactly the same happened down here, guys. You've got this previous build-up of price action. If you go back to the previous bull run, what was it, guys? It was support, come back down, support. This is the 3-day chart. The higher the time frame, the higher the conviction. Come back down, support, 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 support until you broke through. You retested it with this candle wick as resistance, and then we've come through. Now, when we were in this accumulation phase, during the Crypto Bullseye, on the Crypto Bullseye channel, during this accumulation phase, I said one thing. Once we've got a break of trend here, you can expect an acceleration of a nearly 3x. So we managed to get that on this channel, guys. We managed to get the break. We managed to get the 3x. So just from that little gap there to that little gap there, that was 3x. And that was going to be our next major resistance level. We expected it to be the next major resistance level because that was the previous bull market support level. So where are we now? We've actually made a move to the upside. The bulls have got some kind of control. We've got a resistance level sat on Avax now at $49.79 to $50. $50 is going to be a key psychological level. You'd expect to get a reaction at $50. But then the important thing is we need to pull back and we need to put in that higher low. So you can see here when you zoom in, you've put in a high, you've come back down, and then you've put in a new high. So what we're going to do next, is we're going to test to see if swing 3 is higher than swing 1. If swing 3 is higher than swing 1, you'd expect a shallow pullback, and then you'd expect a continuation of wave 5. So it could look something like this. Let's get the extension tool on first. From its low to its previous high, back down to its low. And you can see, guys, swing 3 is bigger than swing 1, so that is giving us confidence that we're likely to get a pullback and have a swing 5 to test the $49.99 to $50 level. So something like this, guys. We've already had the reaction. Pull back at this level, and then we can try. It for the swing 5. Like I say, this is going to act as resistance. This is going to be a key area to overcome. Once you've broken and closing above the 50 level, that's going to regain control for the bulls in the short term. And then we can start looking for higher projection levels. Once you do beat the 50-cent level, guys, remember we've got this barrier to overcome, the previous bull market support level. So once we break the previous bull market support level, guys, once we break the previous bull market support level, you have got a gap then from here down to here. You've got a gap of 50% to the upside. So from where price action is now, and I'm not saying you should be taking a trade from where price action is now, that's 120%. So in an ideal world, what we're looking for is a deep pullback, making sure that we're putting in a higher low. If you come back down and tested this 786, guys, come back down, test the 786, it coincides with this previous high. That's the previous high that we broke, and that's the previous high that was resistance that we need to come back and flip support. So as long as we hold this level, as we're coming back down, as long as we hold this level, we remain bullish. RS flip, resistance, resistance, support. So that's what I'm looking for. And that is a drop from where price action is now of 27%. So the key is, guys, you're buying here, you drop all the way down here. That means 27% of your capital's gone. If you had $1,000, that means that $270 of your capital's gone from this little swing here. However, if you had $1,000, this is hypothetical, guys. It's not financial advice. This is just risk management techniques, trading techniques. So we're pulling back, and we're holding a support. Does this mean if we hold this support, that means that we're going to continue to the moon? It doesn't, but what it allows for is tight risk management, because we know that this was previous resistance. We're holding support, and if we're holding support, that means that we can do one thing. Holding support, you're shooting for the previous high. That means that you can put your stop loss below the previous resistance level, which we'd expect to flip as support. And what that does, increases your risk to reward to something like 5.5 to 1 in this example. Take this trade 5.5 times, and then you win once, and then you break even. Take it 5.5 times and win more than once. And that means that you're consistently profitable, you're highly profitable. So it's not all about winning 60, 70, 80%, guys. You can have a good risk to reward and win a lot less trades and ensuring that you've got that support zone capital. It's all about the preservation of capital, guys. So at this level here, you can't preserve your capital. Let's do the same thing again. Take this trade here. You're shooting for the high. Shooting for the high. This needs to go below the previous support. So what does that do to your risk to reward? You're looking to gain this bit, and you're potentially going to lose this bit. So by just being patient and waiting for a pullback up until a support zone, which was previous resistance, it brings your allocation of capital down. It preserves your capital. And if you're wrong, and we are wrong, guys, nobody's ever right. If you're wrong with the least amount of capital, then you live to fight another day. So this is short term, guys. That's what I'm looking for, the short term. What about bull market projections? What we're going to do for bull market projections is we're going to stick a Fibonacci retracement tool on there. We're going to stick it from the previous bull market high, and then we're going to take it all the way down to the bear market low. I'm going to take it to the bear market low, and I'm going to be looking for two key levels. I'm going to be looking for two key levels. I'm going to be looking for the 1272 extension. I'm going to look for the 1618 extension. So the 1272 extension, this is going to be the conservative level. That's $184.96. 1618, they often hit the 1618, guys. A lot of the time they hit the 1618, and during euphoria they'll go and hit the 2618. Not interested in euphoria, guys. That's the thing that catches people out. And that's the thing where you've got to be in and out as much as possible. That's the thing when the exchanges are crashing. That's the thing when it's difficult to start moving your assets out. Euphoria is a bad thing, and you want the limited amount of capital possible during that euphoria stage. So the big 1618, that's more realistic. That's sitting at $232.76. So those are the projections for the all-time highs, guys, for the bull market going into 2025. However, in the short term, we need a few conditions to be met to be able to get a better entry. That condition would be a pullback. This resistance level here sitting at $31.19 is going to be my key support if we can pull back to this level. So let me know in the comments what you want me to cover next, guys. A big thank you as well to all my subscribers. I've had about 600 subscribers in the last 28 days. So some people are liking my content, but 90% of you guys that are watching it don't actually subscribe to the channel. I don't know if you do like the content, but I hope you do. If you do like it, subscribe. Do me a favor and see if we can get to 7,000 by the end of the year. So I appreciate each and every single one of you guys. Take care and goodbye for now.